Hey guys, welcome back to another video. So in this video I'm going to talk about Fibonacci, how I trade it and how you can start implementing this way of trading Fibonacci into your own trading. So guys, to start off with, Fibonacci is basically the golden ratio, the sequence of Fibonacci numbers. So you find them in basically anything, like the leaves on a plant, the amount of leaves they have will majority of the time be like a Fibonacci number. So using Fibonacci on trading, so what you'll have is when you just say you're uptrending, the market never constantly just moves up. You'll see that price comes back for a pullback, and majority of the time this retracement, pullback, whatever you want to call it, will retrace to a Fibonacci number. So it's really effective. In my opinion, Fibonacci is probably one of the best tools to use as a technical analyst, because you can anticipate this retracement and get on this move early before its second leg to the upside. So it's a really good way of getting entries, and also using the extensions of Fibonacci in a minute. What I'm going to show you, the extensions can be used for taking profits. So starting off here guys, I like to use the Fibonacci on a 4 hour, sometimes a 2 hour and a 1 hour as well, but on like a smaller scale. So I'm going to start off with a 4 hour here, and I'm just going to show you a second. These are my Fibonacci's I have. Let's just put it back on. So just let me show you a second. So this is the retracements I've got on. You can take a screenshot, copy this if you want. So I obviously have the 0 and the 100, which is the high to the low, the edge of the range if you like. The 38.2 retracement, the 50%, the 61.8 and the 78.6. And for my extensions I have the minus 27.2 and the minus 61.8 as well. So yeah guys, if you want to copy that, feel free, it's up to you. The levels, you can have like different prices, like to show the prices and all that, but I specifically just keep the percentages. So starting off guys, for my Fibonacci, so say we're downtrending, I will always take the high to the low, and I'll wait for this 27.2 to get filled before then starting on my next Fibonacci. So if this is confusing, I'm going to show it all and go through it with you in a second. So once this is complete, I'll then take this high here to this new low, wait for this pullback, Fibonacci retracement, and once then this extension is filled in, just say it's come down to minus 27.2, I will then take this high and look for the new low and for the new retracement. So I like to follow the trend. So if we're making lower lows and lower highs, I'll obviously start from the top to the bottom, higher highs, higher lows, from bottom to top. So starting here guys, this is a high over here. So you bring it down, you can even use this one here if you like. You can see we've retraced to the 78.6 and we've fulfilled these extensions now. So this Fibonacci here is now complete. So you go to the next high, which is here, bring it down to this low, and you can see it's not going to be exact every time, but gives you a good guideline. So we retraced to the 61.8 and we fulfilled this the minus 27.2 down here. So then you bring the Fibonacci down to this high here, this low, and you can see we didn't quite make this retracement here. So what I'll do then is I'll bring it down to the next low. So as you can see, what I'm doing is I'm using the wicks as well. I feel that this is the most effective way to use Fibonacci rather than the bodies. So this wick here to this wick, but what you can see now is this downward structure, this being the last low high, is now being broken because we come up, took out this high, so this is a now higher high. So what I want to be doing now is take away this Fibonacci, because as I said, this downwards trend is now finished and we're now uptrending. So now I want to start from bottom to top. So I'll start from this low here, start up with this high, this wick, and I'm anticipating this new higher low to be formed. So you can see we're struggling around the 38.2 at the moment, which also lines up with weekly support. You see we've got this area here. So that's a way of anticipating the retracements. I'm going to show you another chart in a minute, but before we move on to the next one, you can see the minus 27.2 and the minus 61.8 extensions are really good areas for taking profit. So if you have a good retracement here to either the 38 to the 50%, 61.8 or 786. So as you can see, we basically retraced it as 50%. If we were to come up to this level, 9 times out of 10, guys, we're going to have a bounce, at least some sort of bounce at the minus 27.2. So what you normally see me do is I'll take 50% of my profit at the minus 27.2, because as I said, majority of the time we're going to have this bounce. And I'll take my, bearing in mind, as you can see here, the monthly resistance lines up this minus 27.2. So in this case scenario, majority of my profit will be taken here, more like 75%. But what I try and aim for, as I said, every scenario is different. 50% at the minus 27.2, 50%, so the rest of the trade at the minus 61.8. So let's just go to another chart a second. You can see I've got my Fibonacci on here. So you start from here, low to high, retrace nicely to the 61.8. And what can you see? Come up to the minus 27.2, had this little pullback back into this area. So now this Fibonacci is done. So we'll start a new one from this low to this high. You can see once again 61.8 retracement, and what do you see at the minus 27.2? We had a pullback once again, nothing substantial, but still 30 odd pips or so. So you can actually trade these extensions as well. So if the minus 27.2 lines up with like a trend line or a key level, you could actually take a short trade here and use it as a confluence. So that's another good thing to keep in mind. But so this now is complete. So what do we do? Take the next low, which is this wick here, this high, a little bit choppy, retrace to the 50% and fulfilled these, broke right through the minus 27.2, had a little bounce at the minus 61.8. So move on to the next one. So we're still uptrending, we've made new highs, so I'm following the market trend. You can see we just come shy of the 38.2 here, so I'll take the next high. So I'll probably use this high up here. But as you can see, we've now broken out of this uptrending 4-hour trend. So now I'd go from the top to the bottom. You can see this is our live Fibonacci here, minus 61.8. So it's quite tricky because we're still in an uptrend at this point before we got broken here. So you have to wait for this price action to form. Before then you can obviously put your Fibonacci on here, and then you can wait for this retracement up to these areas here. But I would have took this trade, but I only have one confluence here, which was the Fibonacci. So I only take trades that have 2 or 3 confluences. So that's why I didn't take this trade. But what you can see is we're still live on this Fibonacci because we haven't fulfilled these extensions yet. So I might be able to get a trade off this minus 27.2. You can see we've got this level here, and this area here is actually a key level as well. So 1.2350. So a couple confluences in that area. Let's see if this trend line lines up here. So if this minus 27.2 don't hold, could potentially have 2 confluences in this area to take a little long up to this area, this key level. So that's how you trade the extensions, guys, and I do prefer trading the retracements and following the market structure. So what I like to see is a higher high, higher low, higher high, and I'd like to anticipate this new higher low. So obviously this being previous resistance as well. This is how you build confluence to a trade. So just say this is the third touch. So 0.1, 0.2, 0.3. So using a trend line, previous resistance, now support. So and then using Fibonacci retracements to find a retracement level. So if price gave me nice price action at this 50%. Targets up to this money 27.2. This is just an example, by the way, guys. And what I always do is I have my stop loss just below the 78.6, because I know if price breaks below the 78.6, it's more than a retracement, and 9 times out of 10 it's going to break this market structure. So that's pretty much everything you need to know about Fibonacci, guys. So I wouldn't advise trading it by itself. Use the retracements alongside a trend line or a key level, and you'd have much better results. So you can anticipate these retracements using Fibonacci, and then obviously using extensions for targets, and you might actually even be able to get a short trade in this case, or if you're downtrending, a long trade from the extension, as long as it lines up with something else, another confluence. But yeah, guys, hope you enjoyed this video. Please give it a thumbs up if it helped you out, and please subscribe. We're trying to hit 100 subscribers by the end of July. I believe we're on like 73 now, so we're getting relatively close. So if you could do that, it'd really help us out, and it means a lot. And yeah, thanks for watching, guys. We'll see you in the next video.